Welcome back. You're watching The Money Show with me, Kavita Thaplial, and there are plethora of funds available in the market to invest your hard-earned money in. But how do you assess which is the right fund for your portfolio? What are the criteria that one should look at to help you navigate through this maze? Today, I have with me Raghvendra Nath, MD of Ladder of Wealth Management. Also, do not forget to send us your portfolio queries on our WhatsApp number. 865-797-4571. You can also email us your questions on the Money Show at etnow.tv. Hi Raghvendra, good evening and welcome to the Money Show. Let's begin with our viewer queries. And today we'll be starting with Shriya's question, and she's written to us from Pune, Maharashtra, and she says that she's looking for a mutual fund scheme with monthly SIP of rupees 70,000. She's 28 years old. And investment horizon is long term, around 15 to 30 years. And very interesting question, and the right age to enter the investment journey, also to begin your investment journey. Although I don't have her on the phone line, I would have wanted to know as to what's the financial goal that she's aligned for herself. But even if it is wealth creation, given the fact that a 70,000 rupees monthly SIP is a good amount, if at all this is the amount she's starting off with, okay, a bit of clarity needed maybe in 15 to 30 years time duration, because there's a 15 years variation in her time horizon as well, which will impact a lot on her corpus as well. But then 70,000, how should she go about it?
Yeah, so no, as Kavita, you rightly said, so the best part is she's just 28 years of age and she's thinking about wealth creation. I think most youngsters at that age are only thinking about spending the money. So it's a fantastic thing. And yes, 70,000 is a reasonably good amount. And if she actually basically continues to have that discipline, and over next 10, 15, 20 years, she can create some very serious amount of wealth for herself. And in fact, in the last 30 years, if you were to look at just for a moment, like you're talking about 1990s, index used to be 3,000. Today it's 70,000, So in index, if you're invested, your money would have grown something like 25 times actually in 30 years time, And if you had done an SIP, it would have compounded so much actually. So so when you look at a 20, 30-year period, the kind of wealth creation that can happen can be enormous actually. My suggestion to her is, since she's just beginning, first of all, diversify her investments rather than picking just one or two funds. She should pick up 4 or 5 funds, maybe a couple of large cap funds, a couple of mid cap funds, and a flexi cap. I'm not suggesting her to invest in small cap funds because the markets have run up a lot last 6 months, last 8 months actually, from 1st April till date. Small cap index has gone up by 54-55%. And so I would rather think that, maybe it's not a great time to start an SIP in small cap right now. When the markets normalizes, she can also add a small cap later on. So start with 2 large cap, 2 mid caps, and 1 flexi cap. A flexi cap in any case will have some amount of small cap exposure, so that will give her adequate diversification. And she can then start monitoring these funds on a regular basis. Every 2 years, 3 years, she should compare the returns and how they are faring with the respective indices, and then decide whether she wants to continue with them or want to change.
All right, I think that will be all. We will move on to our next question. And the query I have is actually, the name is actually withheld on request, but it's a very interesting question of a 29-year-old female. And she's been watching our show regularly. She's unmarried medical professional with a monthly income of 32,000. And so far, she says that her dad used to invest on behalf of her. And so the SIPs have been going on since last 11 years. But now he's retired, and he would want her to take stock of her investments, and she would like to invest 18,000 every month, and she aims to create a retirement corpus of 8 crores in next 25 years. And so far, no financial liabilities. The kind of portfolio she has, she plans to continue her SIP in the mutual funds which are already existing in her portfolio. And 70 lakhs is almost the amount. I mean, it's grown up to 1.20, the entire portfolio value so far. And she's got a lot of funds. I mean, I think there are almost 18 funds, and apart from that she has PPF account also where 20 lakhs has been accumulated. She's been investing 1.50 every year. So you have the list of the funds, right,
Yes,
Raghavendra?
yes.
There are
Yeah,
18
yeah.
funds. So clearly she's over diversified, and also it was her father who was doing the investment for her, and now since she's taking that under her wings, I would like you to help her understand that having too many funds will not lead to having a higher corpus or a greater return.
Yeah. No, Kavita, very interesting actually. And I see this with a lot of individual investors. They think mutual funds like shares. So when you create a portfolio of shares, you tend to diversify across 18, 20, 30 different companies because you want to play safe. If one company doesn't do well, then the others are supporting. And so that concept of portfolio creation works well when you are buying stocks directly. So when a fund manager is investing, he's not investing your money in 5, 10 companies. He's investing that money into some 40, 50, 60 names. If you pick up any large size fund, let's say a Nippon large cap or a UTI mid cap or let's say HDFC small cap, these funds will have 50 to 100 underlying companies investment. But when you are investing in mutual funds, you by over diversifying, you may end up actually buying almost every investable stock in the market. So if you look at, let's say, the underlying of all the funds, she has 18 funds, and if you look at all the companies which these funds have in turn invested, this number will be something like 400 or 500. So that kind of diversification actually brings down the returns rather than creating returns, because you are then very close to where the market is. If the market goes up by 5%, your portfolio goes up by 5%. Whereas the whole intent of investing into actively managed mutual funds is to beat the market. Otherwise, why should you pay so much expense? You can as well go into an ETF or an index fund. So my first suggestion to her is, when she's taking over, first of all, she should start watching ET Now kind of programs very regularly, so that she gets educated about investing, because investing is a science and it requires a little bit of experience. Her father was doing it for her. Now
Exactly, so very right. And also, I think the investment patterns and rules also have changed over the period of time. Now, since I have you on board, Raghavendra, let's quickly filter out the portfolio. I'm almost running out of time now.
yeah.
So,
So
what are the exits? Yeah.
Yeah, so my suggestion will be, out of 18 funds, she should basically just select 5, okay, out of that. Stop the SIPs and rest and shift them into these 5 funds. One is a S&P 500 that I've selected out of our portfolio. That's a global fund, so it gives global exposure. Then Parag Parekh Flexi Cap, Motilal Oswal Tax Saver, Motilal Oswal Multi Asset, and ICICI Pru Value Discovery. So other than these 5 funds, she should stop the SIP and move the money, all the new SIPs, into this. And plus, whatever corpus she has accumulated, if it's already long term, she can also move that money into these 5 funds.
I think that will be all. And next time, I would request the person who sent us a query to, I mean, if possible, just to be there on phone line with us so that we could help you better. But with that, I think it's a wrap for today. Thank you so much, Raghavendra, for being on the show and helping our viewers with their mutual fund queries. I'm going to sign off, but I will be leaving our viewers with our email ID and our WhatsApp number, where you can also send us your question and we can do your live financial planning on the show. 865-797-4571. The Money Show at etnow.tv is the email ID. Thank you so much for watching. Goodbye.